If I had to start over in 2025 with just 10,000 rand or 10,000 Namibian dollars, this is exactly how I would invest it. No fluff, no guesswork, just smart, beginner-friendly money moves that actually works. And I will show you step by step. Hello, beautiful people. My name is Elizabeth, but you can also call me Les. I am on my financial freedom journey, and on this channel, I talk about personal finances and wholesome living. If financial freedom interests you, engage with me in the comments, leave a like and subscribe to the channel for you to receive more tips on personal finances and so that we can get to financial freedom together. Please note that nothing I say on this channel should be seen or received as financial advice, and if you are looking for financial advice, please speak to somebody who is certified and registered with the relevant bodies in your area in order for them to provide financial advice. If I were to invest my first 10,000 rands or 10,000 Namibian dollars, this is what I will do. The first thing that I will do is actually to understand my risk profile. And the risk profile is important to establish or to determine for yourself so that it can allow you to choose the right investments for you. So here what I will do, I will look at whether I am conservative, whether I am moderate, or I'm aggressive when it comes to my risk profile. Your risk profile is about how much risk you are willing to take when it comes to your money or when it comes to your investments. And this actually shows you or helps you to determine how comfortable are you with the changes in your investments, the ups and downs or the volatility when it comes to your investments. How comfortable are you? Do you have little comfort in those movements? Are you okay with those movements? Or you are totally not worried about any movement when it comes to your investments? When it comes to the risk profiles, you have three of them, which is your conservative, your moderate, and your aggressive. For me to consider myself a conservative investor, I have to look at whether I am somebody who is not comfortable at all with any volatility when it comes to my investments. If I know that I feel sick or I feel to my stomach when I see those ups and downs when it comes to my money changing in value, or my investments going up and down in value, then I am a conservative investor. Now, conservative investments, we are looking at cash, we are looking at bonds, and we are looking at broad market ETFs or exchange traded funds. So these are the type of investments that you consider if your risk profile is conservative. When it comes to a moderate risk profile, you are okay with the ups and downs of your investments, or you are a little bit more comfortable when it comes to the volatility within your investments. Now, these moderate investments can be a mixture between local ETFs and global ETFs. So if you have a good balance and a good mix between local and global, then that is considered part of a moderate risk profile. Then when it comes to aggressive risk profile, you are really looking at people who are very, very comfortable with volatility. People who are not worried about the movement when it comes to their investments, whether the value is going up and down frequently. They are not panicking, they are actually comfortable, they are not worried, they are actually okay. So these are the type of people who have an aggressive risk profile. Considering the three risk profiles, I am actually moderate to aggressive. Looking at my age, I have a bit of time in the market, so I can actually be a bit aggressive. At the same time, I also want to live off my investments when I retire early, so I want to look at moderate and aggressive investments that can bring me high returns. Of course, they are high risk, but they can also bring me high rewards, and I can live off from those investments if I retire early. The second thing that I will do before I invest my 10,000 rands or my 10,000 Namibian dollars is actually to know my investment goals. And this ties in with your risk profile also, because here you are asking yourself questions such as, what is my time horizon? When do I need this money? What do I need the money for? if I need the money for retirement and maybe I am in my 20s or in my 30s, it means I have a good number of years ahead of me, so I can choose investments that will do well in the long term, and I can also choose investments that are aggressive because I do not need the money immediately or in the medium term. Then you also need to ask yourself, do you want dividends or you do not want dividends? Are you investing for specific goals or not? For instance, the specific goals that you could be investing for could be a down payment on a house. Maybe you need that money within the next 3 to 5 years. Or are you maybe investing for a college fund for your child, which could be money maybe that you only need to access in the next 10 years. So you need to look at what are my goals when it comes to my investments. Now, when it comes to my goal, when I'm investing my 10,000 rands, my goals are actually long term. I'm looking at more than 5 years from now, probably 15, 20 years from now. So my goals are long term, and I also want to invest in dividend paying investments so that when I retire early, because I'm on my financial freedom journey and I would like to retire early, when I retire early, then I can actually live off from my investments without having to sell them. So a good dividend income will come in handy for me. So that is part of my goals. Long-term growth, dividend income, so that when I retire early, I live off from the dividends. The next thing that I will do in order to invest my 10,000 rands or my 10,000 Namibian dollars is to choose a platform. Choosing the right platform for your investments is important because of so many different factors. And most of the stockbrokers or most of the platforms where you can invest your money, they ask you to open an account and they have required documents that you have to submit with your application. For instance, you have to prove your identity, maybe with your national ID or with your passport. You also need to provide proof of residence, like your physical address where you are staying. You also need to provide proof of your banking details. This could be through a bank confirmation letter that confirms your account. You also provide your tax information, maybe your tax registration certificate is what you submit, and any other documents that provider requires for the KYC information. Now, for me to choose a platform, there are certain things that I am looking for or that I look out for before I choose a platform to put my money in or before I choose a broker to invest my money with. The first thing that I look out for is low transparent fees. I want to know that the platform that I am choosing has low fees. Remember when I always say when it comes to investments and long-term growth, the lower the fees, the more money you have in your pocket and the better for you. So I want a platform with low fees, and I want a platform where there are no hidden fees. I want to already understand from the beginning, this is the fee structure. I get charged for this and that, and everything is transparent. There is no hidden costs that I have to inquire where my money went because things were not communicated upfront. The second thing that I look out for in a platform is whether it's user-friendly. The interface of that platform needs to be user-friendly. I don't want to be getting lost trying to buy my stocks or my ETFs. I don't want to always be struggling to use either the web or the mobile app. It needs to be user-friendly interface. I need to have my things displayed, must have my dashboards, I must have how much money I have invested, the growth. So you want all those information to be displayed and the platform to be user-friendly. So these things are important to me when it comes to choosing a platform. The third thing that I look out for, does the platform provide or do robust research? Are they having research information that I need in order for me to feel confident in choosing the investments that I choose within that platform? Is there real-time data on the platform? Am I able to go to a specific stock or a specific ETF and get information about that ETF? What does it hold? Are the minimum disclosure documents that I can find on the platform? All the information that can assist me to make a decision and to feel comfortable with my investment, do they actually collect research data and have that available for me as a user? on the platform. The next thing that I look at is whether I have access to a range of products on that platform. Am I able to buy stocks? Am I able to buy ETFs? Am I able to buy REITs? Am I able to buy crypto if I ever get to a point where I want to add crypto to my investments? Do I have fractional shares? And for me as a beginner in this case, fractional shares are actually important because it means I can get more for less. If I only have a 200 rand that month, I can still manage to buy fractional shares and own little pieces, little tiny pieces of different investments. So fractional shares are important to me, especially because in this case, I am a beginner investor. The other thing that is important for me to look out for when I'm choosing my platform is regulation and safety. Safety in terms of, are my investments safe? Do I have two-factor authentication? When I log in this platform, am I able to have two-factor authentication in place? Or will someone be able to hack me and then they just access my accounts? And in terms of regulation, is that broker or that platform registered with the relevant bodies to make sure that our investments are safe? Do they have investor protection? If something happens to that company, are my investments safe? So those are the things that one also has to look at. And for me, it's important to know that yes, there is regulation in place, there is protection in place, my money is safe, my accounts are safe. And if anything happens to that broker or that company, my investments are held separately and they are not affected by whatever internal issues are happening within that company that allows me access to these investments. The next thing that I look at is the type of accounts that that platform or that broker is providing. Do I have access to demo accounts? Demo accounts are important for me when I am a beginner. I want to have this demo money or this fake money for me to actually play around and learn the platform and gain my confidence when it comes to investing. So I want to have a demo account. So a platform that has a demo account is a good platform for me. And I also look at, does the platform provide a tax-free savings account? That is important because then it means your money is growing and you are receiving your dividends and all of that tax-free. And do I have custodial accounts if I want to open that? Do I have access to retirement annuities on that platform if I want to open a retirement annuity? So many different account options are actually good for you so that if you want something else later, you do not need to go to another platform or another broker for you to access these types of accounts. At least you have a lot of options and you can choose what is best for you. And as time goes, you can keep adding accounts as you need. The last item that I look at when it comes to platforms is customer support. As a customer who signed up with this platform, will I be heard if I have a query? Is it clear who do I ask or what is the process? Are my issues actually resolved when I have an issue? Or is it those things you send an email and it takes you a week for you to actually hear back from the company or from the broker? It is actually important for me to have that customer service. Can I reach out via email? Can I reach out via call? Can I reach out via maybe a chat box or whatever, SMS or WhatsApp line, so that if I have an issue at any given time, I am able to access support and my issues are actually resolved. Now, when it comes to platforms that are available to me, in this context, I am looking at platforms that allows me to buy investments on the Namibian Stock Exchange and also platforms that allow me to buy investments on the Johannesburg Stock Exchange. When it comes to the Namibian Stock Exchange, there are a few names that one can consider or a few platforms that one can consider. These are your Ceres Securities, it's your PSG Namibia, it's your Simmons Storm and your IJG Securities. So those are some of the brokers that you can actually use or look at to buy investments on the Namibian Stock Exchange. And then for the JSE, you can look into Easy Equities, you can look into Satrix Now, you can look into Interactive Brokers, you can look at FNB Share Investment, you can look at Standard Bank Online. So those are just a few out of the many others that you can actually have a look at. So you look at those platforms and you make a decision for yourself. In this case, I also have to make a decision to invest now my 10,000 rands or my 10,000 Namibian dollars. Out of all this, the Namibian Stock Exchange ones and the JSE ones, then I have to make a decision on which one I will use. Since I'm starting out with my 10,000 rand as my first ever investment, I will go for Easy Equities as my platform where I will invest my 10,000 rands. And the reason why I pick Easy Equities is because, number one, they have low fees. And as I mentioned earlier, fees are important to me. The lower the fees, the better. I also like the fact that Easy Equities allows me to buy fractional shares. As a new investor in this case, I want a platform that allows me to buy fractional shares because I might not always have enough money to buy a full share of a company or a full share of an ETF. So fractional shares are very good for me. Then the other reason I picked Easy Equities, it's because they have demo accounts and I want to play around because I'm learning, I'm still new in this investment game. So a demo account actually allows me to learn without me losing actual money. Their interface is also simple and easy to use. So as a new investor, it comes in handy for me. I'm not getting lost all the time trying to get things done. And on top of all the other features that I like about Easy Equities, they also provide a tax-free savings account and they provide exposure to local and international markets. So there's a wide range of products that I can choose from. There's also a wide range of accounts that I can access. There's even a USD account, apart from the other accounts. For me, it's a good platform to start with, and that is what I choose for my 10,000 rands investment. Now that I have chosen my platform where I will invest my money, it's now time for me to choose the right investments for me. Based on my financial goals, which I have mentioned earlier, where I want to have long-term growth while I also have access to my investments in early retirement and I draw money through dividends. And also looking at the fact that my risk profile is moderate to aggressive, I have chosen to put my money into exchange traded funds, which I will be using Easy Equities for that. And then the other money, I am putting it towards my emergency fund, which will be held in a money market account in one of the local banks. You might be wondering, why did I choose the ETFs and why did I choose the money market account? For the money market account, I chose that because of accessibility. Since I want this money to be my emergency fund, for accessibility, the money market account is good for me. When there's an emergency, I can easily access the money. And the second reason I chose that is because while my money is remaining accessible to me, I am able to get a decent interest on that money. Most money market accounts with most of the banks, you get either on par with inflation or slightly above inflation. So it's actually a decent amount of interest that you get on funds that you can easily access in cases when you have an emergency. And for the ETFs, I chose the ETFs, or I will choose ETFs because ETFs are low cost, number one, and I love low cost things so that I can keep more money for myself and I can reach my financial freedom faster. ETFs are also very well diversified, especially when you go with the global or broad market ETFs. You are well diversified either by region or by sector. You do not need to worry when things are not going well in one sector or in one geographical location. You know that other locations or other sectors are doing well and you are not constantly worried about how your investment is doing. So based on those reasons, ETFs are the best choice of investment for me as a beginner, in this case, investing my first ever 10,000 rands. Okay, here are some beginner friendly ETFs that I'm considering for my beginner portfolio, where I will invest my 10,000 rands. The first ETF that I will consider is the Satrix MSCI World ETF, and this tracks more than 1,500 companies across developed markets. Here we are talking about your Apples, your Nestles, your Samsungs, and other large companies. Now, why I love this ETF is because of the broad global exposure and strong long-term performance. Then the next one I'm considering is the Satrix S&P 500 ETF, which tracks the 500 largest companies in the US. These are your Apples, your Amazons, your Microsofts, and many others. This is good for US market exposure and for long-term growth. Then the next ETF I'm considering is the Satrix Top 40 ETF. And here we are talking about the 40 largest companies on the JSE, which is your Naspers, your ShopRite, your Capitec, and many others. And this is good for local diversification, and it also pays dividends. The next ETF I'm considering is the Cautious DiviTrax ETF, which is high dividend paying South African companies. So this ETF tracks high dividend paying South African companies. So this is income focused, and it's good for stability and passive income. The next ETF that I'm considering is the One Invest Global REIT ETF, which is tracking global property companies. And it's good for diversification and exposure to real estate. So if you are not able to buy real estate in terms of physical property, you can actually get access to an ETF like this, and then you have access to dividends that are coming from those investments. The next ETF I'm considering is the F&B Global 1200 ETF. It used to be called Ashburton 1200, so it's now F&B Global 1200. It tracks 1200 global companies across the US, Europe, and Asia. And this is one of the good ones for broad market exposure, and it costs lower than some of the alternatives in this category. Then the next one I'm looking at is the 10X Total World ETF, which is tracking more than 9,000 companies in over 60 countries. And it's one of the most diversified global ETFs in South Africa. Includes developed and emerging markets. Then we move on to the next one, which is the Satrix Global 100 ETF. And this one tracks the top 100 US tech-heavy companies. Here you are talking about your Googles, your Meta, your Nvidias, and other big tech companies. And this is good for high growth and is also focused on tech. And if you are into innovation and tech, this is a good ETF. The next ETF I'm considering is the Satrix Emerging Markets ETF. And this is an ETF where companies in fast-growing economies like China, India, and Brazil are represented in this ETF. And this is good because it's also high growth and it has potential. However, it's quite volatile. So there's a bit of up and down because you are talking about fast-growing economies. So there's a lot of changes there. And then the last one I'm considering is the Satrix Global Infrastructure ETF. And this is global companies in infrastructure and utilities. So it tracks global companies that are in infrastructure and utilities. And this is good to just add that defensive assets and stability to your portfolio. So those are the 10 ETFs that I'm actually considering investing my money in when I'm investing my first 10,000 rands or 10,000 Namibian dollars. So looking at what each ETF is tracking and why it's a good ETF or why it's potentially a good ETF for me, I will now make my decision on which ones will I go with. So here is how my beginner portfolio will look like for my first ever 10,000 rands that I am investing for the first time in 2025. As you can see, the first fund that I chose is the Satrix MSCI World ETF, and I have allocated 50% of my money towards that ETF. And the reason that I did that is because I want global growth and I also want diversification. So it's a good ETF for me because of the diversification and the growth aspect or the growth potential that the ETF still has. Then the next ETF I chose is the Satrix Top 40 ETF, which I have allocated 30% of my 10,000 rand. And this is because I want local exposure and I also want dividend income. Remember, in my financial goals, I have indicated that I want to live off dividends from my investments when I one day retire early. So this is a good start for me as my first investment in the stock market. The next ETF that I chose is the Cautious DiviTrax, and I've allocated 10%. And the reason I picked this is because it's a good, stable income from South African companies. So it goes towards my goal of living off dividends. So it fits in perfectly because it can also give me dividends. Then the fourth that I have picked is the money market account with a local bank, and this money market, I have allocated 10% of my 10,000 because this is for me a short-term buffer which is meant for my emergency fund. So I can access it anytime I have an emergency, and I am also able to get some good interest from the money market account while my money is held there waiting for emergencies to happen. So that is how my beginner portfolio looks like for my first ever 10,000 rand that I am investing in 2025. So I have picked some global diversification, I picked local diversification and dividends, I picked local dividends, and I have also picked a money market account that gives me good interest while my money remains accessible for my emergency fund. I have the option of holding these investments in a tax-free savings account, like now my ETFs, or doing that in my discretionary investments. So I have that option. I can even duplicate the same investment in my tax-free savings account are the same ones that I have in my discretionary investments. Now that I have picked my portfolio, this is what I am going to do. I am going to hold these investments for the longest time. So this is like a long game for me. I am not looking at drawing this money anytime soon. I am going to hold these investments for a very long time. I will also remain consistent. Any money that I get, I will put into these investments. So because the platform that I chose allows me to invest or to get fractional shares or to buy fractional shares, I will remain consistent even when I only have a 200 rands or a 200 Namibian dollars. I will put it towards my ETFs that I have chosen. I will also make sure that I automate my contributions towards my investments, both for my money market account and for my ETFs that are held with a broker. So I'll automatically transfer money, or I'll set up automation from my checking account or my transactional account into the money market account as well as into the stock market account. I will also make sure I keep the fees low by remaining with the platform that has low fees and remaining with investments that have low fees. And I'll also make sure that I reinvest all my dividends. As I go through the years with these investments, I will make sure that I reinvest all the dividends so that I really fully benefit from compound interest. And like I said before, I have an option of having my ETFs in the tax-free savings account so that all the dividends that I get and all the growth that I get remains tax-free. I do not pay any tax on those investments. However, if I choose to duplicate what is in my tax-free savings account into my discretionary investments at a later stage, then the ones for my discretionary investments, obviously I will be paying tax, but I will still hold for the longest. I will still reinvest the dividends. I will still keep the fees low and all the good stuff. Now, what I will not do is to panic sell or panic buy investments. I will not do that. The other thing that I will not do is take financial advice or investment advice from social media. Like when someone posts something on Twitter, then I run and buy or I run and sell. I will do my own research first before I make any investment decisions. I will also not try to time the market. I will rather ensure that I get into the market and I have time in the market instead of trying to time the market. And that is how you end up buying high and selling low, because you are trying to time the market. So those are some of the things that I will not do or that I will avoid with my nice portfolio that I have started, to grow it further so that I can live off the dividends at a later stage and I can also build wealth in the long term. If you found this video valuable, the best way to actually support the channel is for you to subscribe and to leave a like for the video, but also engage in the comments and tell us how would you invest your first ever 10,000 rands. Head over down in the comments and let us know so that others can also learn from you. I will see you over here.